Thank you. Thank you very much, Will, and thank you, Richard. Very lucky to have you here this morning for this webinar. I'll be running through some of the local impacts, some of the key local impacts for the Hunter from this pandemic, from the COVID crisis. I'll be looking in the 15 minutes that we have at the labour market and also at the housing market, and I've got a presentation which I think is up on the screen right now. It's great, okay. So just moving through to the first slide, looking at the labour market COVID impacts. So what we can see there, this is data that's from the ABS Labour Force Survey. So this is sort of a key data source providing information on employment impacts from the ABS. Obviously, all eyes have been on this data set in terms of national commentary. We know that because of the way the pandemic rolled out and because of the social distancing and the lockdown restrictions, that there were freezes, closures, curtailment of ordinary economic activity, and that the impacts are very dramatic, as Richard's outlined historically. So what we can see here is the Hunter region, and we're using a 3-month moving average. Bit of debate around whether we do use a 3-month moving average, because obviously we want a sharp, short time period for this analysis. But I think the other thing we're weighing up when we're using this regional data from the ABS Labour Force Survey is that it does have sampling error, and the sampling error is sizable, and the sampling error is very significant, particularly if you're using data at the SA4 level, so below the Hunter, so Newcastle and Lake Macquarie, and you're looking at the data month on month. So I've made a decision in this presentation to use a 3-month moving average that smooths the data out. But using the 3-month moving average, we can still see that employment declined significantly within the Hunter region. So it's fallen by 36,500 jobs, so 36,500 people out of work from February. That's reasonably evenly split between part-time and full-time workers. Most of those job losses happen between February and April. What that represents is 11% fall from the February employment figure, and that is much sharper actually than the fall that occurred for the state overall, which is around 5.5%. Similar figure for Australia overall, 5.2%. So we've fallen at sort of twice the rate of New South Wales. Part of that is an April revision that the ABS put in to their labour market statistics, which disproportionately seem to impact our region. So again, we're using the 3-month moving average to kind of smooth out some of that sampling issue, and we'll have to see how the sample and how the data evolves as we move through this period. But looks like sizable impacts from the labour market, the ABS Labour Force Survey. The COVID impacts, what these impacts represent is taking the level of employment in the Hunter back to February 2016. So we've effectively lost more than 4 years of jobs growth within the Hunter labour market, just over a couple of months. The New South Wales figure is not quite so bad. If we can just move down to the next slide. What we can see there is the unemployment rate. And so this again is drawn from the ABS Labour Force Survey. So the region's sitting with an unemployment rate, and we're using 3-month moving average again of 8.2% compared to the New South Wales rate of 6.5%. If we have a look at the actual rate, the gap's a bit wider, 9.5% for the Hunter compared to 6.7% for New South Wales. And that's, of course, up from a low of 4.3%, an unemployment rate of 4.3% in the Hunter in February. So really dramatic changes in the unemployment rate. We would not see these kind of movements historically over that period, even during an ordinary economic crisis. As Richard mentioned, the impacts of job losses have been disguised by many people leaving the labour force. So in our region, 27,000 people have effectively left the labour force, which means that you don't see them show up in an increased unemployment rate. Nationally, the participation rate sitting at its lowest level since 2001. Sorry, that was in May. There was a little bit of an improvement in June. And in May, the ABS estimated that the effective unemployment rate if labour force participation rate had stayed the same would be 11.3%, so sizably higher than the rates we're seeing at the moment. Particularly alarming in this graph is the growth in the youth unemployment rate. So it's sitting at 19.8%. It's well above the state youth unemployment rate of 13.8%. It's more than doubled from December last year when it was around 9%, and it's more than double the overall Hunter rate. Some of the reasons for this rapid increase, and I'll unpack this youth rate a little bit more in another slide shortly. I think come back, you can see them in the 2016 census. So what you can see in the 2016 census is that the Hunter region has a disproportionately higher share of young people compared to the state and many other regions in Australia in key affected industries, so in food and accommodation, in arts and recreation, in retail. And I think this is part of the reason why we've seen this ramping up of our youth unemployment rate. It's also potentially a function of the sample size and some of the sample volatility that comes with using regional data as opposed to state and national data from this labour force survey. Thank you. Just on to the next slide. And the other factor we need to think of when we're talking about, a headline unemployment rate, of course, is underemployment. And so underemployment's a measure, alternative measure that's been developed around labour market impacts, looking at loss of hours of work. So underemployment can be defined as workers who are not working the hours that they would like to work. So part-time workers who are not working the hours they would like to work, or full-time workers that are not working their standard hours. And this series goes back all the way to 1978. We can just see, what the position we're at in the labour market in Australia in terms of the historic trends of very, very high underemployment rate and a very, very high youth underemployment rate, and that ramping up there. So hours worked in all jobs have fallen around 10%. The Reserve Bank had predicted that hours could fall up to 20%. They've only fallen 10% so far, but still that's a really dramatic change in hours worked and in wages. Obviously it flows through into wages. The underemployment rate for 15 to 24-year-olds in April peaked at 24%. And the overall rate peaked at 14%. Those figures have come down a little bit in June. There's a little bit of a bounce back in hours worked, but obviously this underemployment story is piling on top of the unemployment story in terms of the overall economic engine, and feeding through into household demand and spending, and the capacity of the economy to propel itself forward as it moves out of this crisis. Just moving to the next graph, we can see the youth unemployment figures there, and what I've shown is again a historic series, so we can see just how dramatic this youth unemployment rate is within the region at the moment. We can also see the New South Wales rate there for young people, and we can see our own Hunter unemployment rate in purple right down the bottom, the overall unemployment rate. So this data going back to the late 1990s, we can see that there's only been a couple of periods in the last 20 years when we've had a rate this high. One is now at the moment 19.8% in November 2014 when the youth rate went to 19.2%, and that was with two things, which was the wind back in mining investment within the region, which affected the labour market, and also some manufacturing job losses which were occurring right across Australia flowing through into the labour market. And the other period where we've had really high youth unemployment rates was with the closure of BHP in the late 1990s. So the underutilisation rate for young people nationally went to a historic high of 37%. So that means that, almost 4 out of 10 young people are not in work or not getting the hours that they would like to work. It's fallen slightly, very, very slightly, to 36% now. The overall underutilisation rate is sitting at 19%. So it's usually around 13 to 14% in Australia. I think this is a really key policy concern and a key program concern for everybody within the region, for industry and government, and for us in academia to think about ways that we can help the region to address youth unemployment. I think there's obviously a key risk in the blighting of young people's long-term work and earning opportunities just as they're getting started. Young people are already in a vulnerable point, often of transition between employment and work, just as this pandemic has impacted, and they're in a vulnerable point in the labour market anyway, because they tend to have shorter work histories and fewer required skills and qualifications, and they've also been more likely to work in jobs that have been impacted by the social distancing measures and the lockdown restrictions. We know from previous research on the global financial crisis that young people, particularly young people without skills, were adversely impacted, and those impacts persisted in terms of their capacity to re-enter and grow and climb up and develop a career path. And I think that's something that we all need to be putting some extra energy towards within the region, because we can see that this is a phenomenon which hasn't occurred to the same degree within the state potentially. And so it's a key concern for us moving forward. This data is another way of looking at some labour force statistics, and it's a novel data set. It's the wages and payroll data set that's come out from the ABS using the One Touch payroll. And it's a collaboration between the ABS and the ATO. And it's been a great data source within the region because it is available by SA4, and I'll run through that SA4 data in a minute, but it's also been a great data source because it's more timely than the labour force survey. And so this data goes out to the 27th of June. I think it's interesting to look at this data because it starts to talk about some of the industry impacts, and we know that the industries where we have high shares of employment, and I've picked some of those industries out there in the graph. Overall, what we can see when we're looking at this payroll data, and unlike the labour force survey, it's got a very good sample size, so it's got 80% of businesses with under 20 employees and 99% of businesses with over 20 employees. Sole traders, however, aren't included. So we're getting away from some of those sampling effects that play out in the labour force survey when we're looking at that data. And what we can see when we looked at this data is, of course, and I've marked two periods there, which is the 14th of March when Australia recorded its 100th COVID case, and also another period, the start of May, when the first JobKeeper payments started to roll through. We can see the very dramatic impacts that came with lockdown and increasing social distancing restrictions. And what happened was that between the 14th of March and the 18th of April, employee jobs overall in Australia decreased by 7.5%, total wages decreased by 8.2%, and most of that change actually happened almost in a single week between the 28th of March and the 4th of April. Females were more impacted than males, and younger people were disproportionately impacted, and to a lesser extent, older workers were more impacted than other workers as well. Then what we've seen is a gradual pickup. So we've seen a gradual pickup of 3.3%, particularly coming out from that JobKeeper first payments period moving up there. And the overall job loss at the end of June is actually 5.7%, not the 7.5%, which was recorded between March and mid-April. So the ABS have estimated that by the end of June, around 35% of payroll jobs initially lost had been regained. And quite a good share of that regaining of employment was for people under 20, which is obviously a really good story coming out of this recovery and coming out of the fiscal measures, the historically extremely large fiscal measures that have been put in place to support the labour market. I guess the hope is that most of the job losses are behind the Australian economy, and JobKeeper continues to effectively stabilise the labour market with the new announcements this week, be it with some tapering and some targeting, and that public health considerations continue to underpin the recovery of the economy. I mean, at the moment, I think we're all feeling that perhaps further opening may be ambitious, but I guess we've got to wait and see, and that will be led by those who understand the epidemiology of this virus. So optimists would say that losses have stopped. Pessimists might stay looking at this data that the recovery has stalled. Just moving on to our next graph, the other cut of this data is looking at SA4. And so what we can see there is job losses between the 14th of March and the 30th of May across New South Wales. They're around 7% across New South Wales as a whole. And in this data set, at least, not so much in labour force survey, but in this data set, Newcastle, Lake Macquarie and Hunter Valley, excluding Newcastle, seem to be performing well over this crunch period where we know most of the employment losses occurred. This might be because of our strong share of health and social assistance employment. It might be partly due to some of our mining employment, which is different to the rest of the state, and potentially lower levels of dependence on things like international visitors and international tourists in some other parts of the state. There's a next drop of this data available on Tuesday, and so I'll be having a careful look at that, particularly comparing it to the labour force survey data, although it's important to keep in mind that these two data sets are quite different in terms of what they're measuring, because this data set is measuring jobs and the labour force survey is measuring people. So just to move on to talk very briefly about the housing market, and I haven't spoken about this so much since the COVID impacts have occurred, but the latest June quarter is showing fairly substantial price falls over the region. That's just in the June quarter, 6% for the year and 11% for the quarter. So the median house price for the Hunter is now sitting at $465,000, and we'd have to go back to September 2016 to see a median house price that low. Prices fell 6% in the quarter for Newcastle and 3% in Lake Macquarie. In Maitland, prices were down 9% in the quarter, and in Port Stephens they were down much larger, 17%. This comes off the back of a bounce back that we saw in the housing market, particularly sort of in the middle part of last year following the recovery in the Sydney and Melbourne housing markets. And falls are even more pronounced in some of the LGAs within the Upper Hunter, particularly the Upper Hunter LGA in Singleton. If we have a look at the commentary that's emerging nationally, analysts are predicting declines of 10 to 15% over the next year or so, potentially in the housing market, led by declines in Melbourne and Sydney. And obviously that's a function of predictions around unemployment increasing, and obviously some financial stress flowing through onto households. Obviously any correction in house prices is a good news story for first home buyers, so that would be great to see those first home buyers coming back into the market. But as Richard mentioned, this is sort of a key part of the household story around the very high levels of debt households are carrying and those really important wealth effects that help to make households feel more optimistic. So in many ways, I think we would like to see the housing markets stabilise to at least underpin some of that optimism and some of that spending for the household sector as we recover, hopefully coming out of this virus. And very lastly, this is some data on building approvals, and what we use is a rolling annual sum, so the data is quite smoothed. The Hunter housing approvals fell by 7%, so in the year to March, but that was less than the fall that occurred in New South Wales, where housing approvals fell quite sharply. The good news story is that residential approvals for higher density dwellings, so things like semi-detached buildings, terraces and apartments, grew sharply at 55% within the region, and growth in this dwelling type has picked up pace in the second half of 2019, particularly within the Newcastle LGA, which actually more than doubled from a low in March last year. So that's a good news story, that pipeline of building approvals coming through at the start of this period, because this data only goes to March, so we're not picking up the COVID impacts just yet. If we have a look again at the national commentary, there's some predictions that dwelling investment is going to contract quite sharply, again 16% for 2021, and that's being driven by the migration story. So predictions around net migration declining, which has been really key in underpinning housing demand, particularly in Sydney and Melbourne, and with high unemployment numbers potentially flowing through as well into the construction sector. There's some that say that the COVID impacts might see larger households break up, which could lead to an increase in demand for smaller dwellings, and that could actually drive some segments of the market. So that would be a positive story coming out of this pandemic as well. And that's really all from me in covering those major impacts. I think it's just a critical time for the region and for the nation and globally, and it's really great to have a discussion this morning with a key national commentator like Richard to put some key national insight into this local story. Thank you.
All right, thank you for that, Anthea. A couple of questions have popped up for you. you have any insights on the differences between payroll data and labor force data? I know that they're different measures, but the labor force data says Newcastle is one of the largest job declines in the country, while the payroll data says that Newcastle has been relatively sheltered compared to other regions. How difficult is it to access accurate data at this time? And which one would you believe, I guess, is the underlying question.
I think that's a really good question. We are always subject to a paucity of data in a region, particularly a paucity of timely data in a region as well. So historically, the foundation, when we've used the labour force survey data, we've been careful to use it not at an SA4 level and to use a 3-month moving average because of the sampling error and some of the volatility in the data. I've actually been speaking to some of the people within the ABS about the April revision that occurred to the labour force survey, because that revision was really changed the region's ranking across New South Wales and across Australia as a labour market. They've recognised that there was volatility. And there was some key, there's some difficulties in their normal methodology, particularly in face-to-face interviewing in that April period. They've addressed it methodologically by relying more on an incoming sample. So that may be part of the story. I think as we move away from that, and particularly if we're not seeing any issues around face-to-face data collection moving forward, I think we can rely on the ABS data the way we have in the past. And I think when the latest data that came out just yesterday, we did see some of those job losses looking to be sustained in that June data. The other thing is the two data sets are quite different, because one is measuring jobs, which means that's the payroll data, and one is measuring people who have lost, become unemployed, which means that they're no longer working more than a couple of hours a fortnight. I think it's even 1 hour a fortnight is the ILO definition. So under the payroll data, you can lose, if you have 2 jobs and lose one of them, you'll be counted as having lost a job, but you won't be counted as having lost a job in the ABS labour force survey, because you've still got hours of work. So there's some fundamental differences in the definition. I think the ABS labour force survey also allows a period whereby you may not be getting any work from your employer, but if you believe that you're still employed, then you can be classified as employed. So it's potentially a little bit more generous in its employment definition than the payroll data, and that might be playing out as well.
Another question on data is, are there similar sort of indicators for things like mental health, social impacts, and impacts on different demographic segments?
So available at the regional level, I think. There is a growing availability of that kind of data, and the Australian Institute of Health and Welfare has always been a key provider of that kind of data. I know that there has been more big data available, and so, for instance, the Alpha Beta Ilion partnership, which has been providing data from 250,000 credit card holders, has a measure of financial stress, which I know isn't the same as some of the mental health issues, but it is kind of correlated around this period. I don't know of any data that I've used currently in the last couple of months, but I think that's a really good suggestion in terms of finding out some more, getting some more fine-grained data on the kinds of impacts that are the lived experience of people with this during this pandemic.
Okay, good. And here's a question for both you and Richard, if Richard can turn back on his video and audio. And that is, what do these data at the national level and the regional level say about how small to medium-sized enterprises are going? Do you want an easier question?
Well, I think that they're saying that they're struggling, and particularly in certain sectors. And so if we go back to the graph where we have a look at the sectors that are impacted across the region, I mean, the disproportionate impacts, particularly on accommodation and food services, arts and rec, but some sectors like finance and insurance that haven't been so impacted and have sort of sailed through relatively steady in terms of those job losses and changes in wages. But, if we think about the volume of employment in our region that is tied up in sectors like retail and food and accommodation, there's of our largest employers. So, and those businesses, most of our businesses in our region tend to be very small businesses. We don't have so many medium and larger sized businesses. And of course, you know, they have extra considerations in terms of cash flow and the level of debt that they can carry and the level of reductions in turnover and trading that they can withstand over time. And so I think that's been a key consideration with JobKeeper, is to help those smaller businesses, which will suffer, you know, financial stress and go to the wall quicker than larger and medium-sized and larger businesses.
Yeah, the impact there does seem to have been larger, doesn't it? Even, you know, if you generalise it to kind of any businesses involved in nightlife, there's the beauty, you know, beauty and the close contact that's involved in that, gyms and fitness. I mean, I guess the good news is I think the government has recognised that and is trying hard, but of course, there's a lot of really small targets to try and hit with its stimulus, but the smaller end of town does seem to have had a more difficult time through this period.
Because don't the figures say something like it's 50% of the GDP and 80% of employment, or vice versa?
Something like that, yeah.
But as you're alluding to, yes, in terms of policy, it's lots of small targets. Let me see if I can find another one.
While you're thinking of one, Will, I actually, there was a question to me which is kind of relevant here. I think it was a question about manufacturing in the Hunter and what's anything more specific I could say. The answer is not really, except that I did come across a piece of work from organisation BZE the other day, Beyond Zero Emissions, that, look, as it says on the packet, is interested in what does an economy look like in a zero emissions kind of world. And they've developed a plan specifically for the Hunter. They've done it for a couple of other smaller geographies around the country as well. So for anyone who's interested in a specific plan, which is kind of positive and forward-looking and focused on finding solutions rather than just talking about what's wrong with the world, the BZE piece might be worth a look.
And I think some of their members are represented in our audience today, so they'll be very happy about the plug. On one question, we'll finish off with one quick question. What do the current trends and the strategies for recovery say about retirement age? Is that something that should be drawn in so you shift the older workers out of the workforce and put them on super? Or do you want to maintain that skill set but have them shift their work patterns in different ways to give more hours to younger people? Or it's kind of the Soylent Green question. What do we do with the older people?
Anthea's looking at me because I'm older, I think.
No.
My presumption, this sounds cavalier, my presumption is I'm not retiring. The economics of this, you know, the labour market's not a zero-sum game. Me as a 65-year-old being in a job doesn't prevent someone else from being in a job. In fact, to the extent I'm kind of producing more than I cost, which hopefully is true, not everyone might agree, I'm actually adding to the economy by staying employed and being productive in the traditional sense and all those things. So I think a world in which demographics is working against us, perhaps immigration rates are lower, natural rates of economic growth are lower, I think retirement ages are going to get stretched out. And of course, one of the big costs of the stimulus programs we've seen through this crisis is interest rates genuinely are at zero everywhere. When you do your kind of discounted cash flow analysis about how much you need to save to retire, it's harder for people. That maths obviously gets more complicated, harder for people to save a lot more all of a sudden, easier to try and compress the period for which you're without labour market income. So, Anthea, there's the good news for you. Yeah.
That's great, and I think also the regional perspective is, you know, an important lens as well, because we know that we have more older people. So the proportion of retirees in many of our LGAs and across the region is higher than in Sydney and Melbourne, and so obviously to be an economic boon for us to have older people participating in the labour market and contributing. And you know, that's been one of the factors that potentially has been holding regional Australia back, is not having those high rates of participation amongst older Australians.
Good. Well, thank you both. I now have to do a quick wrap up. For future such events, keep an eye on the Hunter Research Foundation Center's e-news and social media, as well as the website. A number of you may be attending at 12 noon today, the first in a 4-part series of webinars offered by the Hunter Business Chamber. Today's event is on JobKeeper 2.0, again, a COVID-19 recovery focus. A recording of our session this morning is available later today on the HRF Center's website, as well as Anthea's PowerPoints, I believe. Thank you to Richard Yetzinga and Dr. Anthea Bill, today's speakers. Special thank you to Paul Craig of the ANZ Bank locally for organizing for Richard to present. And thank you to our members of the audience for attending and for posing such challenging and revealing questions. So thank you, everyone.
Thank you very much.
Thank you.